Welcome to the Hurst Trading Room. My name is David Hickson and this is a video update for the 11th of May 2015. As always, before we take a look at the markets, please make sure that you have read and understood these disclaimers. If you are watching or listening to this podcast anywhere other than on our podcast channel, then please make sure that you subscribe to the Hurst Trading Room podcast channel on either iTunes or YouTube. In that way you will be alerted whenever I publish a new video. Let's take a look at the markets, and we will start, as I pretty much always do, with the S&P 500, and let's discuss what has been happening in the S&P 500. First of all, when we look at this chart, there's something fairly obvious to my mind that is happening, which is that there has been a lot of up and down movement, a lot of volatility. We've seen very strong downward moves, such as last week. Tuesday and Wednesday, the S&P 500 really came down very hard, bounced back up again on Thursday and Friday. We're seeing really big range moves in very short periods of time, and I've discussed this phenomenon before. I've called it the quickening of the cycles, although in fact, of course, that's a misleading term because the cycles themselves aren't quickening. But what is happening is that the shorter cycles are rising to dominance. In other words, the shorter cycles are moving the market very strongly one way and then another, rather than being overpowered by the longer cycles. And it is something that I have observed very often happens round about the formation of a peak. As you know, I'm looking for a peak. I've been looking for a peak for some time. I believe the markets are due to form a peak. They might have already formed that peak, or we might see another push up to see the stock markets form a higher peak. That is certainly possible. But the fact that we're seeing so much shorter cycle dominance, or strong moves of the shorter cycles, I believe is a warning sign. This is based purely on my experience. It's not something that Hurst wrote about, as far as I know, but based on my experience, I find that this is a warning sign that a peak is in the process of being formed. What very often happens when we're expecting a peak in the markets is you see this kind of short-term volatility. It moves down very fast and everybody thinks, okay, that's definitely the peak that is coming in the markets, and then it bounces up again. The next day. It's nothing unusual. It's something that happens very often. What was that big trough that formed last week, on Wednesday of last week? I'm pretty sure that was a 40-day cycle trough. As you can see, there's the nest of lows. The 40-day cycle trough was expected in the S&P 500. It was expected last week. We had an interesting moment of confusion last week. In fact, if I zoom in, you can see here we go. The market came down the week before, Thursday the week before. Let me change that pen. It came down here and formed a trough on that Thursday, and that was certainly a possible trough for the 40-day cycle. And when we looked at it, it looked like a good clean M shape, and that looked good for a 40-day cycle trough. And so there was some debate as to whether that was the 40-day cycle trough or not. The markets came up again, lost strength as they approached the previous highs, and the FLD is a matter of interest. I'll show the FLD in a moment. And then fell down again and bounced, of course, again. And so this trough here was almost certainly the 40-day cycle trough. Here's that nest of lows. As you can see, that trough last week was pretty much bang on time in terms of when we were expecting the 40-day cycle trough to occur. Now let's take a look at the FLD, the 20-day FLD. Here it is, and let's see what has been happening. This is, of course, according to the analysis that I have presented over the past few videos, which has the 80-day cycle trough over the Easter weekend, or perhaps in the week that preceded the Easter weekend. There was a bit of a spike down on the Wednesday before that, but I prefer to place the 80-day cycle trough over there on the Monday, the 6th. So as you can see, I've pinned that trough there. I've influenced Sentient Trader to position that trough there, which gives us these interactions with the 20-day FLD. There's the A category interaction as price broke up above the FLD. Very good A category interaction, fulfilled and exceeded its target. Then price came down to the FLD, tracked along the FLD, as you can see. That was the B category interaction. Bounced up above the FLD, that was the C category interaction, and then the D category interaction as it came down to the 40-day cycle trough, which was, of course, about 2 weeks ago now. That was the D category interaction. Then we had the price come back up to the FLD and touch it and not succeed in crossing above it, which was a nasty trick of the markets, and it's something that you do often see. And you will notice, in fact, on the Hurst signals charts that there is often a warning about this. Be careful of price returning to the FLD, because it is something that does often happen. Price will come down below the FLD or above it, and then it'll very quickly return to the FLD before it actually completes the move, which is what seems to have happened as it moved down to the 40-day cycle trough over here. I often have people ask me, how can we know that that is going to happen? The truth is, it's very difficult to be absolutely certain. You know, is this price returning to the FLD or isn't it? As a general rule of thumb, it's very important to measure your cycle lengths. And so let me count the bars here, or in fact that's not very useful if I count the bars by doing that. Let me count the bars with this bar counting tool. As price bounced out of the trough that occurred on the 30th of April, as we considered whether that was a 40-day cycle trough or not, we could say, okay, 24 days have elapsed. There you can see 24 days. Now, 24 days is a very short 40-day cycle, very short. The average length for a 40-day cycle is 34 days. It's also useful to bear in mind the recent length of the 40-day cycle, which you can see over there, has been 29 days. So at 24 days, that really is very early. It's 10 days earlier than we would have expected an average cycle trough to have occurred, and it is a good 5 days earlier than the recent wavelength of the 40-day cycle. And so when you see a bounce occurring early like that, the odds are probably in favor of the fact that price is simply thrashing around a bit and is returning to the FLD and is not likely to break up above it, and is going to do what it did last week, which is come back to the FLD and then drop down and complete its move into the 40-day cycle. Now, that's a rule of thumb. It's very difficult to make hard and fast rules about any of this. Analysis using Hurst cycles is an art, and trading it, you need to learn to master that art. When I looked at that trough, I did think that 40-day cycle looked too early for me personally, but I can't promise that I do that every time. You know, I can't promise every time that happens I get it right. By no means do I get it right every time. But certainly when a bounce occurs from a trough that seems unusually early, then the odds are probably in favor of the fact that price is going to come back up to the FLD, track along it a little bit, and then drop down and form the trough a little bit later. So let me clear that bar count. So what that means, of course, if the 40-day cycle trough occurred last week, which I think it almost certainly did on Thursday of last week, is that this was our D category interaction here as price came down. We had price returning to the FLD, but in a rather devious sort of a move, which took many of us by surprise, and then came down to the 40-day cycle trough. And then the E category interaction was the interaction that we saw last week, a particularly difficult trade to get into as a matter of interest, because of course the FLD came all the way down here like that. And so it was a tricky trade to get into, but that would have been the E category interaction between price and the FLD. What do we expect next? Well, the E category interaction, or I should say the 40-day cycle trough, is likely to lead to a bounce, and we expect to see the markets climbing up a little bit and then coming down into an F category interaction. Now you can see that today already price is touching this FLD. It has touched the FLD in the overnight market over there. It has touched that FLD. I never set stop entries for a Monday, certainly not at a level which is within Friday's trading range. So I would not enter into a short F category trade if it happened today. And as you can see, the FLD drops very sharply into the middle of this week before climbing back up again. So we need to give price time to move, and it's going to be easier on us, certainly if price bounces up a little bit and then comes crossing down somewhere over here towards the end of this week or early next week. That'll give us a much better entry, and certainly I'm going to wait for that moment. I never like to chase after trades. When the configuration between price and the FLD is slightly awkward, as it is at the moment, I don't want to chase after that trade. I wouldn't be surprised to see price actually sticking to the FLD. It seems to have enjoyed the FLD very much recently. Look at these periods of time when price has pretty much tracked along the FLD. It spent a lot of time on the FLD, so it wouldn't be surprising to see price continue to track along the FLD and come all the way down here before actually bouncing up. Okay, that wouldn't be impossible, and I don't want to enter into a short trade prematurely. As price is bouncing out of a 40-day cycle trough, I do expect there to be a little bit of a continued move to the upside, the bull side. However, as you know, we've been discussing in these videos for several weeks now the fact that the 20-week VTL has been crossed. It has been breached. Where's the 20-week VTL? There it is. And even with the VTL displaced as it is at the moment, and I won't waste time explaining exactly why that is, effectively the VTL, as you can see, has been dropped below the formation of the trough, which seems to break some of the rules for plotting the VTL. But the reason it does that is because Sentient Trader knows, in the back of its mind, if you like, if Sentient Trader as a software package has a mind, which we could debate, but it knows that potentially, in fact, the 20-week cycle trough only in fact occurred over here, and so because of that, a safe position to draw the 20-week VTL is a position you see it in over here. And you see what happened last week? Again, the 20-week VTL was breached. So the fact that that 20-week VTL has been breached means theoretically that we have seen the peak of the current 40-week cycle. So that means that in theory there is a ceiling on this move, as I've discussed before, which is this high price over here. Now price keeps on sort of battering up against this high price, and in theory it shouldn't exceed it. But I keep saying in theory because I have found in experience that the VTL is slightly less reliable, if you like, than the FLD, and so I tend to take that that rule that the high price or the peak price has been seen with a pinch of salt. In fact, it's not really a rule. That's the point. It's an indication that the peak of the 40-week cycle has formed in the markets. But I have seen occasions where VTLs get broken to the downside, and price does then go up and make a higher peak before coming down again. So that is by no means a hard and fast rule. It's simply an indication, if you like. Hurst spoke about a confirmation that the peak has been seen in price, and most of the time it is true that when a VTL is crossed, that high in price or the low, if it's the other way around, the VTL, then we have seen that peak or the trough, and therefore the confirmation is true. But sometimes I find that VTLs are not quite as reliable as we would like them to be. So I'm certainly not holding my breath in terms of not expecting a new high. I think it is quite possible that we will see a new high. And so speaking of new highs, let's take a look at a market that has made new highs, of course, which is the Nasdaq. Where's the Nasdaq? There it is. Okay. Now, the Nasdaq is an interesting analysis. and it's an analysis that takes a slightly different view. As you can see, here is the 20-week cycle trough at the end of March or beginning of April. That's the 20-week cycle trough in the Nasdaq. Now you will know that in the S&P 500, of course, I have the 20-week cycle trough somewhere over here, and I have this trough at the beginning of April as the 80-day cycle trough. Is it possible that two such closely correlated markets have different analyses? Yes, absolutely. The cycles move all the markets, but they move them all slightly differently, and the analysis from one market to another will differ slightly. And this is the kind of way in which these differences show up. I think that this is the most likely analysis for the Nasdaq, which means that the 20-week VTL is the dashed green line that you see over there. And as you can see, the 20-week VTL in the Nasdaq was also broken last week. What did that tell us? Well, that told us that the peak in price, again theoretically for the current 40-week cycle in the Nasdaq, is the peak that we can see on our charts. In other words, it has already occurred in the markets, and there is that peak right at the end of April. That is the peak in the Nasdaq. So again, theoretically, we're not expecting the Nasdaq to reach new highs. Interestingly, of course, the Nasdaq did reach new highs at the end of April compared to these highs over here in February and March. And very possibly that is because the 20-week VTL had not been broken, and that is because the 20-week cycle trough needed to be here at the beginning of April, as you see on this chart. Let's take a look at another US market, the Dow, and here it is. And you can see that the analysis that I have for the Dow is similar to the analysis that I have in the S&P 500, which shows the 20-week cycle trough as occurring at the beginning of February. There is the 20-week cycle trough, and here is the 80-day cycle trough. In my opinion, it was a fairly early 80-day cycle trough, and this trough that formed last week was also, in my opinion, a trough of the 40-day cycle. However, it is not impossible that that trough might be a trough of the 80-day cycle. Let's just quickly measure those bars. If this 20-week cycle trough did occur over here at the beginning of February, then is it impossible that the trough that we saw last week is a trough of the 80-day cycle? It's not impossible, no. So that is something that we need to bear in mind. That might be a trough of the 80-day cycle. And let me just show you how that would work. Here is the M shape of the 20-week cycle, and then here is the M shape of the 80-day cycle. So in other words, this trough over here, perhaps in the week preceding Easter, was a trough of the 40-day cycle. That is perfectly possible. So what does that mean? Again, we have a little bit of ambiguity in the analysis. We very often have ambiguity in the analysis. Analysis, as I've already said in this video, is an art. And when you're speaking about an art as opposed to a strict science or a mathematical calculation, obviously there are things that are open for debate, and sometimes you will have some ambiguity. In the Dow, therefore, I think that it is most likely that the 40-day cycle trough occurred last week, as you can see, which means that we are now in an E category interaction. Okay, and next is the F category interaction. But it is also possible, just possible, that that trough that occurred last week was a trough of the 80-day cycle. That means that the interaction that we have recently seen between price and the FLD was in fact an A category interaction. Now, if that is true, then we need to be very careful about going short when price comes back down to the FLD. So I am not going to jump into this short trade because, first of all, it is a little tricky to enter in the S&P 500, and let's zoom in and have a look here in the Dow as well. you can see we have a little bit of what I call an FLD spike, which is the FLD is heading up, it would seem, but well, here there's a big spike downwards. So even if price comes down into this level this week, I would not be interested in entering into that short trade. So I'm not jumping into this short trade. I'm also keeping in mind, at the back of my mind, the thought that this might be an 80-day cycle trough. If that is an 80-day cycle trough, then our next interaction will be a B category interaction. So what I need to do is watch this cycle playing out. If it continues with the kind of strength that it showed at the end of last week and Thursday and Friday, then the odds will increase that this is indeed an 80-day cycle trough and not a 40-day cycle trough, and therefore I will avoid entering into the short trade. Now let's quickly take a look at the DAX, because there is an interesting lesson to be learned, or not a lesson to be learned, but there's an interesting point to be made in the DAX. And I have two possible analyses in the DAX. The first one is this default analysis. Now, as you can see, here is the 18-month cycle trough in the middle of October. That is pretty much beyond debate. I think that is almost certainly a correct positioning for the 18-month cycle trough. Here is an 80-day cycle trough, a very good looking 80-day cycle trough. We had a nice M shape coming into that 80-day cycle trough. But now here is a slightly questionable trough placement, and that is the 20-week cycle trough. Now, you will know that in my analyses in the US markets, of course, I am placing the 20-week cycle trough at around about that time. And Hurst defined a principle of commonality, which tells us that markets tend to move with a great deal in common, and therefore if a 20-week cycle trough was forming in the US markets, chances are a 20-week cycle trough was also forming in the European markets, even though it's a very small and subtle trough. What do I mean by a small trough? Well, you can see price actually only came down for about a week into that trough, which is a very small downwards move for a move into a trough. But we do get a good M shape to that cycle, even though it is very distorted to the upside. So it is perfectly possible that is a position for the 20-week cycle trough. But then what happened is that we had a big strong move up like that, which of course we expect following the trough of a 20-week cycle. Then a move down into here, which according to this analysis is the 40-day cycle trough, and then price bounced back up again, and it has continued to come down over here into this trough over here. Now, what is this trough? Well, according to this analysis, as you can see from this nest of lows, that is an 80-day cycle trough. Now, is it possible, therefore, that an 80-day cycle trough is forming in the DAX, or has formed last week, potentially in the DAX, and also perhaps formed in the US markets? Perhaps this is an 80-day cycle trough across all markets. Perhaps I was incorrect to position the 80-day cycle surrounding the Easter weekend. Here in the DAX, the time surrounding the Easter weekend was particularly unremarkable. Here you can see this is the Easter weekend over here. Oh, I've drawn that really big, covering about 2 weeks. That's the Easter weekend, that gap over there, and it doesn't look anything like an 80-day cycle trough around about that time. So it is quite possible that in fact an 80-day cycle trough formed last week. Let's take a look at an alternate analysis in the DAX, and I can very easily generate this alternate analysis by pinning the 20-week cycle trough here in late March. Now, if we have a look at this analysis, there are several things that are not quite as satisfactory. The first one is the M shape for this 80-day cycle. Notice that over there. Doesn't look quite as good as the other analysis. Then we do get a very strong move up from this 80-day cycle trough over here, and we get a good M shape for that 80-day cycle. So there's nothing wrong with that. There's our 20-week cycle trough, and since then we've seen a bounce up, and then prices come down into what is probably a 40-day cycle trough. So can you see how, considering all these different analyses in the different markets, we have two distinct possibilities. One is that a 40-day cycle trough formed last week, across all markets. The other possibility is that an 80-day cycle trough formed across all markets. Or, of course, the most likely outcome is that, in fact, a 40-day cycle trough formed in some markets and an 80-day cycle trough formed in other markets. But let's focus on the DAX for a moment, and let me zoom in and tell you or explain to you why I don't like this analysis so much, and I think it is more likely that an 80-day cycle trough has formed in the DAX. The reason has to do with the FLD and price interactions. Here is the 20-week cycle trough that formed towards the end of March. Here is our A category interaction, which really effectively occurred over that weekend, making it a slightly difficult interaction to catch. Here is our B category interaction as price came down below the FLD. But now, between the B and C category interactions, we usually expect price to track along the FLD. Did it? No. It dropped clearly down. That looks like a really good cross down below the FLD. So that raises a few questions in my mind. Here is the C category interaction as price crossed back up above the FLD. In fact, it didn't successfully cross above the FLD. You can see it straddled the FLD for 3 days and then dropped down again. Again, not a very typical C category interaction. But here is the D category, not B, the D category interaction as price dropped down below the FLD, and therefore, of course, what we saw over the weekend, again, price crossed the FLD over the weekend, and that is, according to this analysis, an E category interaction. Now, that just doesn't look very good to me. There are too many things there that don't make a huge amount of sense. First of all, the A category interaction, as you can see, spent 4 days here trying to break up above the FLD. That's unusual. A category interactions are usually really strong, fast price crosses. The B category interaction dropped too low. C category interaction hardly got above the FLD. D category interaction crossed down below it, yes, but again it wasn't really even a price cross. It was simply price letting go of the FLD following a period of tracking along it. So that doesn't paint a very pretty picture in my mind. I'm not very happy with it. Let's go back to the other analysis, which is in fact the default analysis that Sentient Trader has been performing, and let's see how our sequence of price and FLD interactions work out over here. Here is our 20-week cycle trough, right on the left-hand side of the chart in early February, and here is our A category interaction. Now, that looks more like an A category interaction, simply because price crossed very clearly above the FLD. Yes, for a day or two afterwards, it came back down again, but it fulfilled its target, and its target for that move must have been somewhere over here. It fulfilled the target very clearly and exceeded it, which is what we expect from an A category interaction. A B category interaction, price comes back down towards the FLD, perhaps touches it, perhaps doesn't quite, which is what happened over there. That looks like a good B category interaction. The C category interaction is as price breaks up and away from the FLD, which would probably be over here. Okay, you can see price almost touched the FLD twice, so that looks like a good C category interaction. The D category interaction is as price crosses down below the FLD, coming down into the 40-day cycle trough. There's the 40-day cycle trough at the foot of the chart. That's a D category interaction. A slightly messy one, but sometimes D category interactions are messy, more often as a matter of interest than A category interactions are messy. And here is the E category interaction. Again, this is the same interaction that we were considering in the other analysis as an A category interaction. Now, it's slightly messy. Yes, price took a little time to actually properly break up above the FLD, but that's not very unusual, I must say, in an E category interaction. It is unusual for an A category interaction, but not that unusual for an E category interaction. So here is the E category interaction, then we get the F category interaction. And that looks like a perfect F category interaction where price drops down hard below the FLD and looks as if though it pretty accurately achieved its target. That looks very good to my mind as an F category interaction. What happens next? A G category interaction where price comes up to the FLD, perhaps crosses slightly above it, but more likely tracks along the FLD often for a fairly brief period of time. G category interactions are usually briefer than B to C category interactions, and so here you can see for 2 days price tracked along the FLD. There you can see it over there, and then of course our H category interaction as price dropped down into the 80-day cycle trough, and here's the nest of lows for the 80-day cycle trough. It's a little bit staggered, but nevertheless it's an 80-day cycle nest of lows telling us to expect the 80-day cycle trough to occur. I think it is very likely that the 80-day cycle trough has occurred in the DAX, the German DAX, and of course we're seeing price coming down a little bit now, but that doesn't negate this analysis. So I do expect to see a little bit more of an upward move in the DAX. Now we therefore have a situation where stock markets around the world towards the end of last week bounced up again. They were either bouncing up from a 40-day cycle trough or potentially an 80-day cycle trough. I'm going to be watching all of these markets very carefully before going short for the F category interaction, just in case it turns out to be a B category interaction for a bounce out of an 80-day cycle, and I would recommend that you do the same. What do I mean by watching the markets carefully? Well, I have a look and see how well this bounce plays out. Let's go back quickly to the S&P 500. Let's see how this bounce plays out. If it stays well, if price stays well below this peak, then I would tend to favor the fact that an F category interaction will occur next. Let's just get rid of that. But I would want to see if this is indeed an 80-day cycle trough, which it might be. Then I would expect to see a bit of a follow-through for this bounce, perhaps even achieving new highs, breaking the VTL rule or guideline. But then I would watch as price came back down towards the FLD, probably not set my stop entry order at the level of the FLD, but allow price to touch the FLD first and set my stop entry order for the next day at the low of that move, perhaps. But I would be watching it. I would be a little cautious, a little careful of jumping into that trade. Let's quickly take a look at the euro to US dollar. As you know, I've been speaking for a very long time about how I've been expecting a very long cycle trough to form in the markets. Here you can see it's a 54-month cycle trough, 4.5-year cycle trough, which I believe very possibly has occurred in early March. But as you know, I've discussed this many times before, it doesn't really matter whether it really is the 54-month cycle trough. It is almost certainly a trough of the 18-month cycle. So we can even just cross out some of those longer cycle troughs. It is almost certainly a trough of at least the 18-month cycle. If you're questioning that, then the 40-week cycle trough certainly is at the very least the magnitude of that trough, in my opinion. Of course, when we're trading using the FLD trading strategy, as long as it is a cycle trough of greater magnitude than 80 days, it doesn't make that much difference to us, as you know, because we have our sequence of interactions that occur. Here is our A category interaction as price bounced out of that trough. The B category interaction as price came back down to the FLD, tracked along the FLD, broke up above it briefly and not in a very bullish manner, I must say. I spoke about this previously in the C category interaction. Here is the D category interaction, which turned out to be a fairly strong bearish move for the move down into the 40-day cycle. If you've been watching these videos, you will know that I mentioned many times that I was watching that first 40-day cycle following a potential trough to see whether it looked as if though the long cycle trough had formed in the markets. And I wrote several blog posts about this at the time, mentioning that this fairly neutral shaped cycle that formed over here did not negate the possibility that the long cycle trough had formed in March, and that sometimes you see a neutral shaped cycle followed by a very bullish cycle. So I was standing by to go long in the euro following that neutral shaped 40-day cycle, and I'm certainly glad I did, because we saw a very good bullish move. Here is of course our E category interaction, and as I said in the previous video, the next interaction would of course be an F category interaction. That interaction occurred, as it happened, over the weekend. Isn't it interesting how often markets cross the FLD over the weekend? That's why dealing with Mondays and weekends is such an important part of the FLD trading strategy. Make sure that you are aware of our trading on Monday guidelines. So it looks as if though that F category interaction occurred over the weekend or very early this morning, and so we are expecting the euro to head down now into the 80-day cycle trough, which, as you can see, according to this analysis, is expected in about 10 days' time, about a week and a half, or perhaps towards the end of next week. We're expecting that 80-day cycle trough to form, and following that cycle trough, of course, we start our sequence again with a long A category trade. So things are looking very good in the euro. They're playing out pretty much exactly as expected. This very strong shift to the bull was not a surprise for me, because I've been expecting the long cycle trough to form in March, and it was good to see that bull finally coming in. Of course, markets could still drop further, and we might see the very long cycle trough still lying ahead of us. But I think the odds are looking good for that long cycle trough to have formed in March. Finally, let's take a very quick look at gold. And gold has been a bit of a surprise. It's been difficult to trade, and you'll know that in my previous video I was looking at this trough over here being the 40-day cycle trough, and price moved up very strongly through the FLD, and then it dropped straight down again and formed what was probably the 40-day cycle trough over here. Have I mentioned that Hurst cycles analysis is an art and not a science? That 40-day cycle trough was difficult to pinpoint and difficult to identify clearly, and it looks as if the 40-day cycle trough in fact only came in is that in the first day of May, on the first day of May perhaps, that 40-day cycle trough for gold. I should point out that I believe that gold should be analyzed inversely, in other words using peaks, and I've mentioned this before, and so here is the inverse analysis, and certainly most of my trading decisions in gold I make using the inverse analysis, and so the inverse analysis hasn't really changed very much. Here is the 80-day cycle peak over here, and you can see we are still expecting price to rise up towards the 40-day cycle peak. But I've just drawn a very unrealistic arrow there. It's not going to rise up that much. Let me just reset that and show you what is expected and what has happened to gold. Here is the 80-day cycle peak, and following the 80-day cycle peak, of course, we expect an A category interaction to the downside. There is our A category interaction, but you see price hardly went down at all. Very deceptive, very difficult, and price then came up to form what we expected to be the 20-day cycle peak, and it tracked along the FLD and then dropped below it, so that looked like B and C, and then it bounced up again in what we thought would be a D category interaction, but we were fooled, or got it wrong, and almost certainly took some losses on that trading situation over there. And so now we're expecting the D category interaction again for a move up to the 40-day cycle peak. But you see what's happening over here? In fact, let me zoom in, because it's very difficult to see what's happening over there. And here is the FLD, and there we go. Because of the recent price action, we have a bit of an FLD spike. Price has crossed the FLD over the weekend, but can you see it has crossed it without redoing anything? Now that's a very dangerous situation in my opinion. Yes, we are expecting price to come up to this 40-day cycle peak, but how much will it come up? Well, it might not come up very much at all. In fact, it might not even exceed the highs of 2 weeks ago in reaching that 40-day cycle peak. The gold price has been very difficult recently, and when I see a messy interaction between price and the FLD like this, I tend to take a step back and say, I need to wait until this picture clears. So that's what I'm doing. I'm taking a step back. I'm not jumping in again for this D category long trade, because price has crossed the FLD by default. It hasn't even moved and it's crossed the FLD. Not a very good situation. So I'm going to step back. I'm not going to take any short-term trades in the gold price, but I am still keeping an eye on this 20-week cycle peak, which I am expecting round about July. So that would be my next move that I would be looking at trading in gold, is the move up to the 20-week cycle peak in July. But I am going to wait until the current confusion clears. And let me just zoom back here, and I would wait certainly until this 80-day cycle trough has formed first. Can you see this 80-day cycle trough over here? So I would be looking at an 80-day cycle trough forming, looks like late May, perhaps early June, and then I would look at going long in gold. Thank you very much for joining me in the Hurst trading room. I wish you profitable trading and look forward to seeing you next time.